Welcome to the deep dive. We're going to jump right in today, getting straight to the heart of the material you sent over.
Sound good.
So today's focus is this really significant transformation of America's trade landscape. Happened back in April 2025.
Right. Sparked by President Trump's new tariff policy.
Exactly. And your sources, they give us a pretty comprehensive look at, well, the scope of the policy, the reactions, potential fallout, all of that.
It's quite a lot to unpack.
It is. So the core question we're tackling for you, based on everything you share, those articles, the analyses, basically, what are the key takeaways? What are the implications of this really major shift in U.S. trade policy?
Absolutely. You've provided a really rich set of information here. Our goal is to just distill that down, get to the most crucial point.
Have a clear understanding.
Yeah, a clear understanding of what was really a pivotal moment in U.S. trade. It's definitely multifaceted, but we'll break it down, highlight what really stands out from your sources.
Okay, let's do that. Let's unpack this. The centerpiece, obviously, as your materials clearly lay out, is this new tariff policy from April 2025. Can you maybe walk us through the main elements? It sounds like a pretty big overhaul.
Oh, definitely not minor adjustments. It really has several key layers.
Okay.
First, there's this universal 10% baseline tariff. That applies to essentially all goods entering the United States, which is, a very broad stroke compared to earlier tariffs that were more targeted.
A little bit broader.
Second, the policy introduces targeted reciprocal tariffs, and these range quite significantly from 11% all the way up to 50%.
Yeah, 50%.
Yeah, on imports from roughly 60 countries. And it's really important to remember this builds upon existing trade measures.
Things already in place.
Exactly. Namely, the reinstated and then expanded tariffs on steel that's now at a substantial 25%.
Okay.
And aluminum, which also hit 25% by February 2025, it had started lower at 10%.
So a multi-pronged approach then. And those are some significant numbers. Your sources mention President Trump's rationale for this. What was the sort of core idea behind such a sweeping change as he presented it?
Well, as the materials you provided clearly show, when he announced the policy, that was April 2nd, President Trump framed it as a pursuit of economic independence.
Economic independence, okay.
Yeah. The central idea presented was really to reshape America's position in global commerce, aiming to boost domestic production, lessen the country's reliance on imports.
Right. So this move towards protectionism, using tariffs to shield domestic industries.
Exactly. It was presented as a way to strengthen the American economy from within, essentially.
And the immediate reaction, particularly in the financial markets, was, well, seismic is a word that comes to mind based on your sources. $6.6 trillion in value, just gone over 2 days.
It really was. Yeah, that figure, it underscores the magnitude of the market's concern.
Huge concern.
Absolutely. That immediate, sharp downturn reflected significant uncertainty, apprehension among investors.
They're worried.
Clearly worried about the potential domino effects, on global supply chains, the broader economy. And during this period, we also saw the U.S. dollar weaken against major currencies, which signaled kind of international unease, a perception of increased risk associated with this U.S. policy shift.
Now, what's fascinating, and your sources really emphasize this point, is America's somewhat unique position to even contemplate such a policy.
That's a critical insight from your materials, definitely.
It's not something many other countries could likely pull off without facing, well, much more immediate, maybe severe consequences.
That's right. The U.S. economy is, relatively speaking, quite self-contained. Trade represents only about 24% of its GDP.
Only 24%.
Which gives it a degree of leverage that many other nations just don't have. If you compare that to, say, Canada trade is 67% of their GDP.
Big difference.
Huge.
Yeah.
Or Mexico, 73%. You can immediately see how much more sensitive their economies are to any shifts in U.S. trade policy.
Right.
In fact, your sources highlight that roughly 15% of both Canada's and Mexico's GDP is directly linked to trade with the United States.
15%. Wow. That asymmetry, it really creates a significant power dynamic in trade talks, doesn't it?
It absolutely does. That difference in economic structure, it definitely sets the stage for some interesting negotiations.
And it sounds like the tariffs had an almost immediate impact on that front.
Yeah.
Especially with, say, our North American neighbors and maybe India.
Exactly. Even before the full implementation in April 2025, your sources say that by March, special arrangements were reportedly already being negotiated. specifically for the North American auto sector.
Ah, the auto sector. Makes sense.
Yeah, the sources indicate that goods meeting the specific rules of origin under the USMCA, that's the trade deal between the US, Mexico, and Canada.
Right, the successor to NAFTA.
Precisely.
Yeah.
Goods meeting those rules were receiving preferential treatment. These rules, they basically specify how much of a product needs to be made within the three countries to qualify for tariff-free trade. The fact that these rules were being prioritized suggests, well, an understanding of just how deeply integrated that auto supply chain is in North America, and probably a desire to minimize disruption there.
Keep the cars rolling.
Something like that. And we also saw India, according to your materials, accelerating trade discussions with the U.S. They were aiming for a pretty substantial doubling of bilateral commerce, up to $500 billion by 2030.
Really? So a clear signal that countries were actively trying to adapt to this new environment.
Absolutely. Seeking ways to navigate this new global trade landscape.
Okay, let's turn our attention domestically now. The reactions inside the U.S., probably not surprising. It sounds like a pretty divided response based on what you sent over.
Very divided, yes.
The steel industry, in particular, seems to have come out as a strong supporter of these measures.
Yes, your sources mentioned Philip Bell, the president of the Steel Manufacturers Association. He offered a really robust endorsement.
What did he like about it?
He specifically praised the expanded steel tariffs and, importantly, the removal of prior exclusions and quotas, things that had maybe weakened earlier tariffs.
Got it. So cleaning those up.
Exactly, which strongly suggests that domestic steel producers anticipated pretty tangible benefits from having less competition from imported steel.
And we also hear about optimism from some smaller manufacturers,
Right.
like Marlin Steel. They were talking about potentially doubling their workforce.
That's right. They saw it as creating a newly level playing field.
A level playing field. So it paints a picture of, potential winners emerging within the U.S. economy itself.
It does indeed. These companies likely viewed the tariffs as creating a more competitive space for their domestically produced goods, simply by making the imported alternatives more expensive.
Makes sense.
But, and this is crucial, as your sources also clearly indicate, this is just one side of a much, much more complex economic coin.
Right. Always more complicated. Which naturally brings us to the broader historical context.
Yeah.
It's almost jarring, reading this, to think that tariffs were once a primary source of federal revenue here.
It feels like ancient history, doesn't it?
It really does. A completely different era.
It's quite true, though. Before World War II, tariffs played a much more central role in government financing. Your sources even reference the Smoot-Hawley tariff of 1930. That one significantly raised duties to historically high levels.
And that didn't end well, historically speaking.
No, it's widely considered to have actually worsened the Great Depression. Now, while President Trump's 2025 tariffs don't reach those extreme levels.
Okay, that's an important distinction.
It is, but they undeniably represent the most substantial return to a sort of protectionist trade philosophy that we've seen in generations, a really significant shift.
So what does all of this mean for the overall health of the U.S. economy? The analysis you sent from Yale's Budget Lab that suggests a significant cut to GDP growth, that's pretty sobering.
It is. Their analysis points to a considerable impact. They estimated that the April tariff announcement alone likely shaved about 0.5 percentage point off U.S. GDP growth in 2025.
Just the announcement itself.
Just the announcement. And when you factor in all the tariff actions implemented, their projections suggest a potential reduction of nearly a full percentage point for the year.
Wow, nearly 1%. How does that translate in real terms?
Well, they estimate the American economy could end up being roughly 0.6% smaller than it otherwise would have been.
Okay.
Which translates to about $160 billion in lost annual output. To put that in perspective, that's comparable to the entire economy of a state like Oregon.
The size of Oregon's economy, that really puts a number on it.
It does. So what your sources paint is a picture where the immediate cost seems quite significant, quite quantifiable. The insight here, perhaps, is that any long-term benefits really hinge on a fundamental restructuring of American manufacturing competitiveness.
Which takes time.
Exactly. Years, maybe decades. And it relies on factors that go way beyond just tariff policy, things like innovation, workforce development.
Right. Tariffs are just one piece. And that impact on the overall economy, it inevitably trickles down to individual households, doesn't it?
Of course.
The Tax Foundation calculation you included, about a $12,043 per household tax increase in 2025. That's a really tangible way to understand the personal cost.
Absolutely. That figure represents the estimated increase in the financial burden on American families, mostly due to higher prices for a whole range of imported goods.
What kind of goods are we talking about?
As your sources detail, it affects everyday necessities, things like groceries, appliances, electronics,
Just
vehicles.
basics.
Pretty much. And what's particularly important to recognize, and your sources note this, is the regressive nature of this effect.
Meaning it hits lower income families harder.
Exactly. It tends to disproportionately impact working and middle-class families who typically spend a larger chunk of their income on these essential goods.
Okay. Now, the employment effects also seem complex, based on your materials, maybe even contradictory.
They definitely present a nuanced picture.
Because while some sectors might gain jobs, others could face potentially significant losses. Isn't there a sort of contradiction there? Aiming to create jobs, but maybe costing more jobs elsewhere?
That's a really crucial question, and it highlights the often offsetting effects of these broad trade policies.
Okay.
So yes, while steel and aluminum producers might see increased demand, maybe expand their workforce, the much larger downstream industries that use these metals.
Like cars, construction.
Exactly. Automotive, construction, appliance manufacturing, even smaller fabricators, they face higher input costs, squeezed profit margins.
Which isn't good for hiring.
Generally not. The economic analyses cited in your sources suggest a potential loss of maybe 5 to 8 jobs in these metal-using industries for every single job created in metal production.
5 to 8 for one. That's quite a ratio.
It is, and that helps explain projections, again, from your sources, of up to maybe 500,000 net job losses across the entire economy.
500,000 net losses. Though you mentioned earlier some unions supported this. How does that square?
Right, that's part of the political complexity we touched on. For some unions, especially in those protected sectors like steel, the immediate prospect of saving or gaining jobs outweighs the broader potential losses. Plus, there's often a longer-held belief in the importance of a strong domestic manufacturing base for, national economic security. It's not just about the immediate numbers for them.
I see. And this economic impact, it isn't spread evenly across the country geographically, is it? I imagine states with a lot of manufacturing feel this more intensely.
That's right. States in the Midwest, parts of the South, places with significant manufacturing sectors are indeed experiencing a real mix of outcomes.
A mixed bag.
Definitely. Some companies in those protected industries might be benefiting less import competition, but others that rely on imported parts or maybe export their finished goods,
Yeah.
they could be facing higher costs or reduced market access because of the retaliation.
Ah, the retaliatory tariffs.
Exactly. And the reported increase in the national unemployment rate that your sources mentioned, going from a steady 4.2% to around 4.7% by mid-2025.
Yeah.
Well, the direct causal link to the tariffs is still debated among economists, as your sources note, but it does suggest some broader economic headwinds that could be hitting certain regions harder than others.
Okay. Speaking of retaliation, the global response, it sounds like it was swift and pretty strategically targeted. Our trading partners didn't just sit back.
Not at all. Canada, Mexico, the European Union, China, they all implemented retaliatory measures pretty quickly, and they aimed them at specific American exports.
Targeted.
Very targeted. Canada, for instance, put 25% counter tariffs on about $20.6 billion worth of U.S. goods, and they reportedly chose goods coming from politically sensitive regions in the U.S.
Ouch. Politically targeted.
Seems that way. Mexico did something similar, focusing its retaliation on American agricultural exports.
Hitting the farm belt.
Right. The EU went after iconic American products, Kentucky bourbon, Harley-Davidson motorcycles, Wisconsin cheese.
Brands people recognize.
Exactly. And China added duties on American farm products, too, especially hitting soybean producers hard.
So these actions really underscore how interconnected the global economy is. Trade disputes can escalate fast.
They really can. And they impact sectors way beyond just the ones initially targeted by the U.S. tariffs. It's also interesting how quickly these players adapted, maybe suggesting the intended effect of isolating the U.S. faced some pushback.
Beyond the immediate tariffs and counter-tariffs, your sources also point to something more fundamental happening, a reshaping of global supply chains.
Yes, that's a major theme. Companies are clearly being forced to rethink their entire production and distribution strategies.
How so?
Well, the new tariff landscape is compelling them to recalculate costs, reassess where they manufacture things. We're seeing an acceleration of nearshoring.
Nearshoring, moving production closer.
Exactly. More companies exploring relocating production to Mexico or Canada, stay close to the U.S. market, but potentially mitigate some tariff exposure.
Okay.
There's also, according to your materials, a growing trend of increased investment in automation.
Robots.
Essentially, yeah, as a way to offset higher material costs, potentially reduce reliance on labor, especially if production costs are going up anyway.
These shifts in supply chains could have really significant long-term implications, couldn't they? For jobs, trade patterns.
Absolutely. Huge long-term implications.
It's also fascinating politically how this policy seems to have created some unusual alliances or maybe highlighted divisions.
That's definitely one of the more intriguing dynamics that comes through in your sources.
You mentioned the traditional Republican business wing often opposing the tariffs, which you might expect them to support.
Right. President Trump's core base largely embraced the tariffs, saw them as necessary to protect American jobs, fight foreign competition.
Okay.
But many within the traditional Republican business community, who usually advocate for free trade, expressed concerns, worried about higher costs for businesses, for consumers, disruptions to established global markets.
But then some labor unions actually supported aspects of it.
Yes, particularly unions representing workers in sectors like steel and aluminum. They saw potential benefits in reduced competition from imports. So it led to this somewhat unexpected alignment of political interests on this issue. Very complex.
Very complex indeed. Now, after that initial shock to the financial markets you mentioned, the $6.6 trillion loss, it sounds like things somewhat stabilized, but maybe with a new factor involved.
Yes, the initial volatility did subside, but financial markets adapted, according to your sources, by incorporating something called tariff risk premiums.
Tariff risk premiums, what does that mean exactly?
It's essentially an added layer of financial caution. Investors apply it when they're evaluating companies with significant international operations.
Because of the uncertainty.
Precisely. Uncertainty about future earnings, supply chain costs, overall competitiveness in the global market due to the tariffs.
So it changes how companies are valued.
It can, yes. And we also observed, based on your materials, a noticeable shift in investment patterns. More capital tending to flow towards companies focused mainly on the domestic market.
Away from the big multinationals.
Away from multinational corporations with those intricate global supply networks, which are now seen as potentially more vulnerable to these kinds of trade disruptions.
Okay. For the average person, though, the most noticeable impact is probably price increases, right?
Very likely, yes.
It sounds like while overall inflation might have shown only a modest increase according to the official stats, some specific sectors saw much bigger price hikes.
That's a key point from your sources. While the broad inflation numbers might look relatively moderate, consumers are indeed seeing more significant price increases for specific categories.
Like what?
Things like appliances, vehicles, construction materials, certain food products. Your sources mention these specifically.
Okay, so this can lead to a disconnect, maybe, between the official statistics and what people are actually experiencing when they go shopping.
Absolutely. The lived economic experience for many Americans, facing higher costs for everyday things, might not feel like it fully aligns with the broader economic indicators being reported.
It really boils down to a kind of strategic gamble then, doesn't it? Looking at the arguments presented in your sources.
That seems like a fair assessment.
The core argument from supporters seems to be that, okay, maybe there's some short-term economic discomfort, some pain, but it's a worthwhile price to pay.
Right, an investment for potential long-term gains.
Like revitalized domestic manufacturing, better trade terms, maybe enhanced national security. Exactly. That's the argument from proponents, as laid out in your materials. That these short-term disruptions are necessary to achieve those bigger goals. Reduce reliance on foreign suppliers, especially for critical goods.
But the counter-argument from critics
Is that those potential long-term benefits are largely speculative, hard to quantify. While the immediate economic costs higher prices for consumers, potential job losses in certain sectors are very real, very measurable now.
a bird in the hand versus two in the bush kind of thing.
You could put it that way, yes.
The historical parallels you mentioned earlier, they offer a somewhat mixed bag of lessons, don't they?
They really do. It's hard to find a clear historical precedent that gives a definitive answer.
You mentioned the Plaza Accord having only a temporary effect.
That's right. Its impact was relatively short-lived in the grand scheme of things. And other historical examples of protectionist policies often show a similar pattern.
What pattern is that?
While certain specific domestic industries might get a temporary boost, maybe seem sheltered, these measures often come at the expense of other sectors, and they usually lead to higher prices for consumers across the board, a broader cost.
And the comparison you drew to President Trump's earlier tariffs,
Yeah.
the ones between 2018 and 2020, That seems particularly relevant here.
Yes, the research on those earlier tariffs is quite telling, and your sources cover it.
What did that research find?
It indicated that those earlier tariffs didn't necessarily lead to higher prices for domestic producers of those goods.
Yeah.
Instead, the costs.
The cost of the tariffs themselves.
Yes, the cost of the tariffs was primarily borne by the American businesses importing those goods.
Not the foreign exporters.
Largely not, according to that research, and those increased costs for importers were often passed straight on to American consumers. Higher prices at the checkout.
So American importers and consumers paid the price.
That's what the studies on the 2018-2020 tariff suggested, yes.
So what really distinguishes this 2025 approach then, compared to those earlier ones? It seems like the sheer scale is the big difference.
Scale is definitely a critical distinction. The breadth and the depth.
Breadth meaning the universal 10% tariff.
Exactly, applying to almost everything. And depth meaning those reciprocal tariffs that could go up to 50%.
That's a significant escalation.
It really is compared to the previous measures, which were more targeted. And your sources note these duty rates are indeed among the highest the U.S. has seen since before World War II.
Since before WWII. That really increases the potential for significant economic distortions, doesn't it?
Yep.
Across lots of sectors.
It absolutely does. The potential impact is much larger.
Businesses, though, as they always seem to do, are finding ways to adapt. Your sources mentioned several strategies,
Yes, businesses are constantly adjusting to the new reality.
like accelerating reshoring efforts, bringing production back.
We are indeed seeing a range of adaptive strategies mentioned. Some companies are actively accelerating efforts to reshore, bring production back to the U.S. Others are diligently exploring, establishing relationships with alternative suppliers. Finding suppliers in countries that face lower or maybe no tariffs on their exports to the U.S. market?
Shopping around for suppliers?
Essentially, yes. Furthermore, many businesses are investing in improving their operational efficiencies, trying to absorb the higher costs of imported materials that way.
Becoming leaner.
Right. And some are even employing sophisticated strategies called tariff engineering.
Tariff engineering, what's that?
It basically means finding legal ways to classify or structure their products or supply chains to minimize the amount of duty they have to pay. It's complex.
Sounds complex, and consumers are reacting too, presumably.
Consumer behavior is certainly being influenced, according to your sources.
How so? Higher prices making people change what they buy.
Well, higher prices for imported goods are naturally leading some consumers to seek out domestically produced alternatives where they exist and are priced competitively.
Buying American, if possible.
Or others are likely just having to absorb the increased costs, which can strain household budgets, maybe lead to reduced spending on other things.
Cutting back elsewhere.
Right. And in some cases, consumers might simply reduce their consumption of products that have just become significantly more expensive because of the tariffs.
So this shift in consumer demand, it can then have ripple effects throughout the economy.
Exactly. Changes in demand resonate through different sectors.
This whole situation seems to have given a real boost to this idea of friendshoring you mentioned earlier. Can we talk a bit more about that?
Yes, that's a very interesting and increasingly relevant development highlighted in your materials, friendshoring.
Relocating production and supply chains to countries that are, well, friendly,
Yeah.
politically aligned.
That's the core idea. It's a strategic move by companies to relocate production, establish supply chains in countries that are politically aligned with the U.S., and often countries that already have preferential trade agreements in place.
So it helps avoid the higher tariffs.
That's a key motivation. It allows companies to maintain global production networks while minimizing exposure to higher tariffs imposed on nations maybe seen as less friendly or strategic competitors.
Which countries are benefiting from this trend?
Your sources mention countries like Vietnam, Malaysia, India, and also Mexico increasingly being seen as attractive destinations for this kind of friendshoring.
Interesting. So it leads to potentially significant shifts in global trade patterns, investment flows, moving things around the map.
Big shifts, yes. Complex secondary effects globally.
Politically, back in the U.S., these tariffs appear to have served a very specific, maybe effective purpose for the Trump administration at the time,
Your sources definitely suggest that.
reinforcing his image as a defender of American workers, American industries.
Absolutely. The tariff policy resonated strongly with President Trump's core base, particularly in those manufacturing-heavy regions that felt left behind or hurt by globalization.
Well,
It provided a very tangible action, something concrete that many voters saw as directly addressing their concerns about, unfair trade practices, the need to protect American jobs from foreign competition. That political dimension was undoubtedly significant.
But on the flip side, it's also clear from your materials that these same policies strain diplomatic relationships, especially with long-standing allies.
That's a critical consequence, yes. A definite downside mentioned.
Allies felt unfairly targeted.
That seems to be the case. Traditional allies, particularly in Europe and North America, expressed considerable frustration. They viewed the tariffs as, unilateral, potentially damaging trade actions.
Even Canada and Mexico pushed back, despite the USMCA deal.
Yes, even Canada and Mexico, despite their deep economic integration with the U.S., pushed back through diplomatic channels and, as we discussed, with those retaliatory tariffs.
So it created real tensions internationally.
It certainly did. At a time when global cooperation on many other issues was and is essential. It really highlights the complex trade-offs governments face. Pursuing domestic economic goals can have significant international repercussions.
Absolutely. So boiling it down for the average American listening,
Yeah.
the impact of these tariffs is really quite varied, isn't it? Depends heavily on your industry, where you live, your economic situation.
Precisely. There's no single narrative that fits everyone. The economic effects are highly differentiated across the population.
So some consumers face higher prices.
Definitely, in certain sectors for goods they regularly buy. While at the same time, workers in some protected industries might see increased job opportunities, maybe greater job security.
But then communities that rely heavily on exports, say agriculture.
They face significant challenges because of those retaliatory tariffs imposed by trading partners. It's a complex, uneven economic landscape. Clear winners and losers in different sectors, different regions.
Ultimately, this whole tariff strategy, it seems to represent a really significant challenge to the sort of long-held consensus around open international trade, the one that shaped the post-World War II global economy.
That's a fundamental question being raised here, yes, a challenge to that consensus.
What was that consensus, basically?
Well, for decades, the prevailing economic theory and policy in the U.S. and many other developed nations has been that open international trade generally leads to greater economic efficiency, more competition, lower prices for consumers, and overall greater prosperity.
And this policy departs from that.
Significantly. President Trump's tariff policy represents a major departure. It suggests a belief that maybe a more managed, more protectionist approach to trade is needed to safeguard American economic interests in today's complex, competitive, globalized world.
And as economists generally agree, trade creates both winners and losers.
Yes, that's widely accepted.
The central debate really shifts then, doesn't it? To how best to manage those negative impacts, how to ensure a fairer distribution of the overall benefits.
Exactly, that's the core policy debate. While the broad consensus among economists usually holds that trade yields net societal benefits overall, it also inevitably creates concentrated costs for certain groups of workers, certain industries facing more import competition.
So the question is what to do about that.
Right. How do you address those costs most effectively, most equitably? Do you use tariffs to protect specific industries, or do you use other, maybe more targeted measures?
Like what?
Things like worker retraining programs, trade adjustment assistance, strategic investments in education, infrastructure, things to enhance overall economic competitiveness rather than just walling off sectors.
Different approaches to the same problem. This clearly marks a significant break from the bipartisan support for trade liberalization that we saw for so long in American politics, right? From Reagan up until maybe the early 2010s.
A very significant break, yes. That consensus held for decades.
So it raises this fundamental question. Is this just a temporary deviation? Or does it signal a more lasting realignment of American trade policy? What do your sources suggest?
That's the critical uncertainty moving forward, and the sources reflect that uncertainty. Whether this is temporary or a more fundamental, long-lasting change, it likely depends heavily on the observed long-term economic outcomes.
How it plays out.
Exactly. If these tariffs are eventually perceived as being successful, revitalizing domestic manufacturing, strengthening the economy without causing huge, broader economic harm, then this approach could potentially stick around, become the new norm, perhaps.
But if the costs are seen to outweigh the benefits?
Then there would likely be significant pressure in the future to revert back, to move towards a more open, more liberalized trade policy again. The jury is still out, essentially.
It's almost as if this policy is actively testing the limits, or maybe the perceived inevitability of globalization itself,
That's a very insightful way to frame it, I think.
suggesting that maybe the level of global economic integration isn't set in stone. It's more malleable, more subject to policy choices than some might have assumed.
Exactly. For a long time, the prevailing narrative was often that globalization is this irreversible, unstoppable force. This tariff strategy demonstrates quite clearly that government policy choices can have a substantial impact. They can reshape international economic relationships. It suggests the degree of integration is perhaps more adaptable, more subject to political will than was maybe taken for granted before.
So as we kind of wrap up this deep dive, it's clear the American economy is still very much adapting, still processing this significant policy shift.
Very much still in adaptation mode.
The long-term consequences are still unfolding. They'll likely shape the economic landscape for years to come.
That's precisely right. Businesses, consumers, policymakers, everyone is still actively navigating this evolving trade environment. And while economic models and data give us valuable insights, valuable projections,
Right.
the ultimate impact, perhaps the most telling impact of this tariff strategy, will really be felt in communities all across America. And the definitive verdict on its success or its failure, well, that remains to be written.
This has been a truly illuminating look, really digging into a pivotal moment in recent economic history. And it was made possible by the really comprehensive, insightful sources you provided. So thank you for that.
Glad we could distill them for you.
Now, considering this huge reshaping of global trade, these ongoing domestic adjustments, if you had to pick one thing, what do you see as the single most critical factor that will ultimately determine the long-term success or failure of this policy? It feels like there are just so many interconnected variables.
That is a profoundly important question, and probably one without a simple, immediate answer. But if I had to pinpoint one overarching factor based on the themes in your materials,
Yeah.
I would argue it will be the ability of American businesses themselves, not just to adapt to the new cost structures, the competitive pressures,
Right.
but also their ability to genuinely innovate, to enhance their productivity in a way that allows them to truly thrive in this altered trade landscape.
So business innovation and adaptation.
Yes. That, coupled with the ongoing responses, the potential policy adjustments of our key trading partners, that combination will likely be the most critical determinant of the long-term consequences.
Definitely something we'll all continue to follow closely. Thanks so much for sharing your expertise and walking us through this deep dive.
My pleasure.
And thank you, our listener, for providing such valuable material to explore. We certainly encourage you to continue exploring the many nuances and ongoing developments related to this really significant economic shift.